Hi everyone, welcome to today's video where we're going to talk about NIO's expected earnings on Tuesday. And if you're new to my channel, you know that I've been quite critical towards this company and specifically the management since they lacked a lot of cost control. This company has lost like $500 million to almost $1 billion every single quarter over the past 3 years. And this is where, like, let's say I started to turn a little bit negative because you simply cannot run a business making almost $1 billion net loss every single quarter, right? So something had to change. And it looked like over the past, let's say 2 or 3 quarters, the management started to implement a lot of stuff. I would say the headcount is still quite high for a company at the size of NIO. They have a lot of employees, but still that moving in that direction. We know that they cut the research and development money. For example, if you look at the budget for R&D in Q4 of 2024, that was 498 million. They cut it down by 11% in Q1 of 2025 to 438 million. And there are some rumors that this might continue, at least maybe not at the same pace, but I would be really happy if they come in around 400 million this quarter and maybe 375 next quarter. That would be really, really nice. The SG&A budget, I believe it's a bit more difficult because they are now selling more cars. So they are, even if the budget is the same, like around 600 million, they are selling like in very, let's say within a couple of quarters, they might be selling twice as many as cars every single quarter as they did already by end of last year, right? So even if the budget is the same, they've become 2 times as efficient. So I don't know how much more they can cut down SG&A. I would like to see your comments in regards to SG&A potential headroom that they can cut down the costs a little bit more. And also by that way, bringing down the operating expenses even more. Like let's say from my projections of 950 million to maybe 850 or even like 800 million. That would be really, really nice to see from the company. But in any case, I mean, Q2 delivery numbers already in the bag, right? And we are already almost done with even Q3. There's only 1 full month remaining, September of Q3. But that would put us at around 93,000 deliveries based on the strong momentum that especially the Onvo San Brown is currently enjoying. You can see that Onvo is finally in week 34 past 4,100 insurance registrations in China. And I don't see that number slowing down anytime soon. I think that they can sustain this level for a long time now because the interest on Onvo is just ridiculous. And the Onvo L90 seems to be such a huge success amongst small families in China. In addition to that, we know that the updated ES8. So that one, my favorite NIO car currently. The interior is amazing. I think anyone that sees the interior of that car is just like the urgent wanted feeling kind of. And you can see that the CEO mentioned that 3,000 to 5,000 units was the expected delivery numbers, which would be quite nice, very impressive. But he's mentioning that the pre-orders is already way above that kind of number. So I think that there's a lot of momentum both in the Onvo and also the traditional main premium NIO brand. Based on those facts and based on the weekly insurance numbers, I updated my monthly delivery numbers. So you can see that previously I had 38,000 for October, 38,000 for November, 45,000 for December. I'm going to stick by 45,000 in December. I'm going to change October and November to 40,000 each. And this is based on the fact that there is simply too strong of a momentum to ignore it. So as things stand now, I would say this is my expected numbers. And that would give us a Q4 delivery numbers of 125,000 vehicles. And that's a complete different beast when it comes to NIO. And considering that they will have by far the all-time high number of delivery numbers in Q4, they already started to cut down some costs. Maybe they will cut down even more by end of Q4. And if you're looking at the Q4 numbers, I would say total revenue of 3.7 billion should be realistic with a average sales price of $29,900. Then I would say total cost of revenue at around 3 billion, the gross profit 660 million. Once you remove the operating expenses, 950 million or so. But remember that again, these are like based on my own projections. If they manage to cut down the SG&A to let's say 500 million, right? Another 100 million, then things looks even better. And since they are hammering so much, they are talking so much about profitability by Q4, maybe that is actually what's happening, right? I mean, one way to do that is to actually even more so control your cost of sales. But I think this is quite like realistic cost of sales. Like if they're gonna increase their revenue from Q3 to Q4 by 19%, maybe the cost of sales should increase by 16.5, so they get somewhat of a scalability, but I don't think it's realistic to expect a cost of sales of 2.8, right? Maybe I'm wrong here, but that is my modeling. But when it comes to the SG&A, I think that's the surprise factor for me. Like, it's so difficult for me to judge how the SG&A budget will look like. We know the latest number was 606 million in Q1. In 2 days times we will have also the Q2 number. But if they can go down to like around 500 million, even if they don't reach profitability, I mean, they're gonna be so close to profitability. Like the net income and net loss with those numbers is gonna be 146 million according to my model. And remember, this is based on the older number of 112,000 deliveries, right? So if we add another, let's say I don't know, 28 there, so we get to 120,000 deliveries. They are gonna be at around 100 million net loss, and that's a complete different, even with the 3.5 billion in the bank, they would still they would have a run rate of 30-40 months before they need even to raise some capital. I don't think if they get down to net income or net loss of 100 million by Q4, I would say they will then turn that to a profit. Then obviously I need to update my Q1 2026 numbers and so on and so forth. But that actually looks quite nice. Like 72,000 is in the bag for Q2 of this year. 92,000 is very realistic based on that we have already the first 2 months of the quarter. And based on my projections of 40 plus 40 plus 45 in the last 3 months, that's 125,000. So actually I should add another, let's add somewhat more of that. That should be then 33. Yeah, you can see that's like 76 million in net income. Then a little bit of downward trends in Q1. NIO is traditionally struggling, as most other companies in China, automotive companies. And then, pick up a little bit of a pace again in Q2 and Q3 and so on. But I would say that if they do 125,000 in Q4 of 2025, they're gonna do probably 150, 160,000 in Q3 of next year. So those numbers of the 2026 needs to be updated. And if they do 76 million or 100 million net loss in Q4, most likely they will be profitable by Q2 or Q3 of next year. And I think that's probably what we are seeing in the stock price at times, now hovering around $6.5 rather than, the low fours that we see a couple of months ago. But still, let's not, get carried away. It's based on a lot of delivery numbers just coming in, week out. And it's a highly competitive market. So I would say that this is based on somewhat of a realistic but still positive point of view. So we need to see, let's say, a couple of more months of strong delivery numbers to see that NIO is here to stay, at least when it comes to these kind of delivery numbers, 7,000-8,000 every single week, potentially creeping towards 10,000 every single week by end of this year, right? That would be great. And we can also see some other graphs that I really like to show you. You can see that when you compare NIO in red and Li Auto in green, XPeng in pink and Tesla, you can see that over the past couple of weeks, NIO is really stable at around 7,000 to 8,000 deliveries, and actually Tesla struggling and now down to 10,300. So all that separates NIO and Tesla right now in China is around less than 3,000 cars according to last week. And I see that Tesla has a facing strong challenges, whereas NIO is now riding a momentum. So I would not be surprised if Tesla dips even below 10,000 and NIO gets close to 10,000 by end of this year. And that would be early this year. I mean, you can see that week 9 NIO had less than 5,000, Tesla 12,000, and then 3,000, Tesla had almost 14,000. So it was 3 or 4 times more sales for Tesla. But by end of this year, we could see almost a comparable number of deliveries. I mean, we are almost there already, right? It's for every 3 cars NIO sells, Tesla currently is selling 4 in China. So it's already it's a really strong performance for NIO. And for this, in this instance, I have to praise the management that finally, done some nice things. But yeah, so that's my expectations anyways for the earnings. And remember that the most important thing on the earnings on Tuesday is not the Q2 numbers. No one is gonna care about the Q2 numbers unless the net income, or in this case net loss, will be like much higher than we expected. Let's say they have a net loss of 800 million, then it's a little bit of a warning sign. So you should still look at that number for sure. But I would say that since we have the Q3 delivery numbers also almost in bag, only September month remaining, and we are already at around, let's say, 60,000 deliveries. So I wouldn't be surprised if NIO delivers, let's say, 125,000 in Q4. And if they do that, I would say, just slight improvement on SG&A. And heck, even if we go back to 570 million in SG&A budget, so still some reduction from the previous 600, but not maybe as much as we would have liked, it's still, gonna be close to profitability. And it's a complete different ballpark when it comes to the amount of money this company loses every single quarter. Then we're gonna be at, let's say, 150 to 200 million net loss, instead of like just a few months ago they did almost $1 billion of net loss, right? It's a complete different game. So I would say, let's wait and see. Don't get carried away. Follow the company thoroughly. Most importantly, look at the net loss for Q2 and their expected guidance for Q3. So in any case, my long summary about this video is that things are starting to get better. The lithium carbonate price also kind of coming down slightly over the past couple of days. But again, zoom out and you'll see that even despite this sharp increase, it's just a blip on the radar. So I would say that that's not a big worry right now. We can see that the swap infrastructure, actually, I would say we are already in September, like from a couple of days from now, and they already built 574 this year. So that's not super aggressive, at least. Although I would like this to slow down even a little bit more. But at least it's not like, it could be worse. It could be like 800 new swap this year already, if they would have followed what they maybe guided at 1,000 every single year, right? They should be around 700 already. So in any case, I would say that things are starting to look better. There's no denying it. But with the history of this management, it's maybe like a bit risky to just bring out the champagne bottles already, right? Maybe you should give it a few more months before you decide if this company is gonna be a super nice investment finally after 3 years of despair or 4 years of despair. And why do I say that? You might have still time to invest in this company if things are starting to move in the right direction, simply because even if the stock price goes to like $8 or 9, you can see that according to my model, they will start to make a lot of profit from now on. If they hold this kind of cost structure, all they need to do is just continue at this momentum, increase sales every single quarter slightly with some dips in Q1 of every year, and they will have nice graph looking like this, for example, with the gross profit, maybe not as aggressive, maybe slightly less aggressive, but still. So that's all they need to do. But let's wait and see. Don't get carried away. Like if the stock goes to 8, that's not in the longer scheme of things. Like even if you buy it at $8 or $9 and they have this kind of development in the future, 2 or 3 years from now, trust me, the stock won't be stuck at 8. It will be like in the 30s, in the 40s maybe even, right? So it's a complete different ballpark. So don't just get carried away, and please comment in the comment section regarding the SG&A budget. Do you think that they can actually cut down the number even more to closer to $500 million every single quarter, or maybe even less? I don't know. What's your point of view? And in any case, thanks for your time and see you in the next one.